A bearish engulfing pattern sets the tone for a bearish IPO. Once the downward channel is crossed, there is the remote possibility of an uptrend. Though bullish volume is abundant into the new year, it is mostly at normal or below normal levels. Bullish weakness leads to another drop and the 1986 low as the focal point of the spread out triple bottom in development. As triple bottom development accelerates, the 23 to 24 range stands out as the upper boundary. As usual, a major upper boundary is broken with 3 methods rising price action and is followed by a normal bearish retracement. In this case, a bearish reversal progresses into a double top reversal for extra bearish advantage. This is due to the bearish IPO and bearish conditions in the broader stock market in early 2020. After recovering from record lows, there is expected resistance back in the double top range. It is also normal to see lower activity after the short-term uptrend lines were broken. The chart progresses to push through the double top resistance as an ascending triangle and reverse head and shoulders form more significant inclines. The result is a characteristic bullish breakout that experiences expected resistance upon contacting the IPO range. As usual, the ascending triangle's upper boundary, marked by the 30 barrier, serves as a key support. It is under pressure, and along the way the gap down area was expanded to factor in the horizontal range into July. After a minor reverse head and shoulders is countered by a bearish engulfing incorporating aspects of gaps. Seen with the rare abandoned baby candle formation, there is an expected drop back to the 30 boundary, where support is once again under pressure. The downtrend line can be helpful as the gap down is filled. It is mostly a passive recovery after bearish overextension from early September. The downtrend line is adjusted to contact the closing prices of the 2 swing points it originates from. This provides a more streamlined downtrend boundary in line with the upper trend line. Price trading above this lower trend line is acceptable since there is higher volume with the second downswing on September 1st. Additionally, the mid-20s range is bolstered as support since a second double bottom recently completed. Price action is neatly contained within all the pattern outlines. Prior to the bullish surge in late 2020, that is similar to one large gap up. Not surprisingly, the large green candles are still slowed down by the IPO range prior to the smaller gap up. As the gap up range forms a wider double top reversal, there is strong bullish opposition despite relatively low activity. This is due to the supporting influence of the gap fill, large bullish candles from late November, and influence from the IPO range.